Hi guys, thanks for tuning in to another episode of Nuggets News. Today we welcome a special guest from the Decred community, a project that you guys have been wanting me to probably have a deeper dive into for a while now. So welcome Checkmatey.
Thanks, Alex. Good to be here, mate.
Yeah, thanks for joining us. You come highly recommended, particularly from the Decred community, and there is a pretty large community within Australia. So today we want to dive into some on-chain metrics which you look at, but I'll maybe let you give the brief intro to your background and how you got into Decred.
Sure. So I was a fellow top buyer back in 2018. So that was I've basically weathered the pain since then. And to be honest, you pay for your education in the market, but initially came in for the tech. And what really finally got me at the end of 2018 December when we had that final capitulation move is I just started questioning. All right, well, it can't be about the tech because there's clearly something else, and Bitcoin is just decimating everything. And that was kind of the first time I went down the Bitcoin rabbit hole. And to be honest, never really left. And I did get fairly close to, I would almost call maximalist state from a monetary perspective. You start to understand the sound money and the more macro side of where this whole technology stack is going. And it really wasn't until I found Decred that I kind of re-expanded my horizons beyond that. And the thing that really got me about Decred was it really comes down to the hybrid consensus mechanism. And what I love about it overall is that it took everything that Bitcoiners hold near and dear and devout and bet against it. And it did it in such an elegant way in terms of its design. By this point in time, I'd done quite a lot of on-chain analysis and studies into Bitcoin. And it really was when I started looking at some of the equivalent on-chain metrics of Decred that you'd start noticing a very different flow that I've not seen elsewhere. And after connecting with a few other analysts, you really start to see there's something else going on. There's a heartbeat in the Decred chain. And I've often said this, if a chain doesn't have a heartbeat, sell it. And there's very few chains out there that have a sustainable long-term heartbeat. And, to be honest, ever since I've basically been down the Decred rabbit hole and never left.
Awesome. Well, yeah, we will get into all that today, particularly the technical side of things, that hybrid model that you spoke about. And something that I think is really interesting is the community, and these older coins do have very interesting and sort of varied communities. So I sort of clumped together, I was saying in the pre-interview, we've got Litecoin, really old school, a lot of miners and whatnot, just that genuine community that's always kind of going to be there. And they argue that it's the silver to Bitcoin's gold. And then we have Bitcoin Cash, a very unique community that clashed in a lot of ways with Bitcoin, but sometimes they are the coin that people choose to use for payments still. Then we've got Dogecoin, which kind of started off as a bit of a joke, but again, really strong old community that don't take themselves too seriously, and they're always going to be there. And then Decred as well. So what drew you, I guess, to Decred? What do you think separates it from those other coins that are all a little bit like the silver to Bitcoin's gold in some ways, true cryptocurrencies that are like a method of payment?
That's a very interesting question. And I guess, the Litecoins and the Bitcoin Cash, I tend to basket in what I would call minimally differentiated coins. Litecoin times everything by 4, hit play, let it run. Bitcoin Cash was a result of the fracturing of the Bitcoin network. And then, we've seen BSV and other things spin off it. So quite interestingly, Bitcoin Cash is a product of Bitcoin's governance model, rough consensus. When you don't reach actual agreement, you actually end up with two different chains.
Which is important, which we'll get to later for Decred's
correct.
governance. Yeah.
Correct.
Yeah.
So what's very interesting about Decred is it prioritized having a single chain, right? So we call it fork resistance. That's both from a technical standpoint, but also in the sense that I would describe Bitcoin. You reach consensus by upgrade, right? Consensus comes from which version of the node you upgrade to. And because of that, if two people operate two different nodes and miners operate two different chains, you get two different chains. For Decred, you actually reach consensus before you upgrade. So it has a formal governance mechanism that ensures that whether it's the status quo or it's an upgrade, consensus is reached before the upgrade goes ahead, right? So in that way, you actually end up with a single chain. And both from a technical standpoint and from a community standpoint, it's very difficult to fork Decred Cash. Very, very difficult to fork and sustain it. So it kind of can, it retains community spirit. And what's very interesting about the project at large is because it prioritizes that consensus before the upgrade, you end up in a situation where you kind of accept that you're not going to win every vote, right? And they've got the way the treasury is spent and everything else. And sometimes you don't get the way you want, but you kind of understand that if you're getting the majority of these things, they're opt-in systems. If you still believe with the general direction, you win some, you lose some, but in general, you are pleased with the way it's going, and it maintains that community. And I think that kind of comes through in the way the community actually, discusses and treats this space at large. Is the thing that really kept me here, the real gravity to the Decred community that's, I think, very different, is there is a focus on the intellectual side of things. There's a real focus on understanding the deep side of, almost everyone in the Decred community understands Bitcoin to a fairly strong, at least the people I've interacted with. They understand Bitcoin. They know why it exists. They understand the technicals. They've kind of gone down the rabbit warrens of what happens when you start introducing, permanent inflation, or what happens if you've got different consensus mechanisms. How does proof of stake compare to proof of work? There's a lot of people who have actually considered all of those realities and have a fairly good grasp, both technical and from a monetary perspective. So there's a lot of very interesting conversations I've had because people have gone down that rabbit hole and then maintained a single community.
Well, let's get into the fork, as you just said then, and let's take the Bitcoin Cash example, where call it 10% of the community weren't happy, they wanted to make a change, and they hard forked away, and we have a snapshot in time for people that understand how Bitcoin works with its UTXO model, the unspent transactions. If you've got coins on Bitcoin, you now have coins on Bitcoin Cash. So if Decred comes to that consensus and it says, well, no, not everyone agrees, we're not going to do that change, you can't create a hard fork. Can someone obviously still copy the open source code, but they wouldn't have the same UTXO models, so you wouldn't have coins on both chains if someone decided to do that? Or how would that work?
Interesting. So basically the way it works is you can fork the code, right? Everything that Decred is actually part of the Decred constitution. Everything is open source and free, open source free software. So yes, you can copy the code, but it's one thing to copy the code. It's a very different story to copy the community, right? You can't copy the human beings behind these networks. So the reason that you can't actually immediately fork, if we were to run Bitcoin through the Bitcoin Cash scenario, when Decred goes for a consensus change upgrade, the code gets implemented to the full nodes, but it's dormant. It's actually not activated. And what happens is you need to have 95% of miners upgrade their nodes. So the node isn't running the new code, but it has the code inbuilt and dormant. And 75% of stakers do the same. So you've now got 95% of miners and 75% of stakeholders who have now said, we are ready to actually approve or deny this change. So the code remains dormant. It then goes to an on-chain vote stage. And that's when people who are buying tickets, which is where you're binding up your coins for an indeterminate amount of time, up to 142 days. So your savings are bound to the chain for up to 5 months. And this is for that skin in the game, right? You will feel the impact, the market's decision, whether it wants to dump it or send it or do nothing, you are going to feel the impact of that. So you are incentivized to make a decision that is for longevity of the project. You're burning your savings otherwise. So that on-chain vote then goes ahead, and if you get a 75% approval of stakeholders, then after a period of, I believe it's a month or 2 weeks or something like that, that's when the dormant code will switch live. Now, the nice thing about this as well is that you basically get a clean upgrade because all the node has already been upgraded, so it just basically switches a toggle on a particular block. And the other nice thing is that a developer can't sneak code in without the explicit approval of stakeholders. So if you do not get a yes vote, it will remain dormant and will never get activated. So you can't actually slip code in. And if one of the maintainers of Bitcoin was to slip code in and not tell people, and people upgraded without the proper review, that is now Bitcoin, and now that's the reality that we deal with. With Decred, there's at the very least an explicit approval. It's almost like a hard signal of upgrading your nodes. So that's how it actually maintains that single chain ethos.
Interesting. And back in the SegWit sort of argument, we did have, I guess, miners signaling their intention to upgrade, and it was above 90% at one point, but that still wasn't enough of a sort of a confidence mechanism for the community to say that, well, we're still risking a split and we don't want another split and whatnot. So a very different governance approach. Let's talk about the technical aspects. By now, most people are pretty familiar with proof of work, with the miners that are consuming electricity to solve equations, and proof of stake, where people lock up their coins and you can stake the network and earn the rewards and whatnot. So what is the hybrid model, and how does that work in Decred?
Interesting. So the proof of work system works very well for coin distribution, and it works very well for having an unforgeable costliness, right? There is the electricity and the hardware burn, and that ensures that it's very, very costly and expensive to try and copy or overwrite the chain, right? To wind back blocks in proof of work is expensive, and there's a technical, logistical power barrier that you can't get by otherwise. The challenge with proof of work is that if you have pure proof of work, you do have a governance challenge. It is inherently rough consensus. The miners have no way, and we actually see this with Ethereum going through their prog power debate. The best way to gauge Ethereum sentiment is with Twitter polls and people yelling on the internet. And how do you actually count what's going on? And we saw this during the Bitcoin Cash and the scaling wars. Is suddenly a whole lot of new nodes show up, and you go, are they real nodes? Is it trivial to spin up a bunch of Raspberry Pis if you're a nation state actor? It's very hard to understand what the people who hold the coins, the coin holders, what is your actual view? The miners can signal, but everyone else can't. So, or at least can, but there's a civil resistance challenge there. With proof of stake, pure proof of stake, it has certain trade-offs with proof of work. Often you have to have an inflationary model long term, so there's a trade-off in the monetary policy. And you also have the nothing at stake problem, which is where, basically if you have a collective of whatever the threshold is, stakeholders can fork and follow any chain, right? There's no nothing tying them to the proof of work. And if you actually have a selection of where you get all the validators, or 75% of the validators, whatever the cutoff point is, if they all agree to completely erase history and build a whole new chain, that can happen. And there's also no mechanism to dilute stakeholders, or at least not in many of the implementations. So you kind of end up with a long-term oligarchy type scenario. So there's an issue with coin distribution as well with pure proof of stake. With the hybrid model, what it actually does is it takes both of those, it takes the strengths of both of those systems, and it actually mitigates a lot of the weaknesses of both. So just a quick overview of how Decred works. You have the proof of work miners who must burn the electricity, solve the initial block, and put all the transactions in. The next block starts being mined, and the miners put up that block, and you must have 3 out of the 5 randomly selected tickets. They all have to approve it. Now, that means that those tickets, if they're running a particular version of the code and the block shows up and it meets all of the consensus rules, then it will be approved and the miner will get their full-scale reward. If they get 4 out of those 5 tickets, then they will lose 20% of the block reward. If they get 3, they will lose 40%. And if they get less than 2, the block actually gets rejected and the miner has to redo the work. So if you have a minority portion of the proof of stake tickets, it actually means that you need to be mining, because your blocks are being rejected on a regular basis. You actually need to be mining much, much faster. And what this shows up as, it's actually an exponential security curve, where if you have 10% of the tickets, you actually need about 100 times the honest hash power to keep your chain up, because every 1 in 10 blocks is being kicked back and rejected. So you can't actually build the chain faster than the honest chain. So there's a technical and that's how you get that fork resistance as well. And at the same time, because you've got the proof of work element, the proof of stake system in Decred is 30% of the block reward. So you are always being diluted. If you started with 50 Decred and you could buy a ticket back in 2016, if you just staked over and over again in a pure proof of stake system, you will still be a validator. In Decred, you actually cannot buy a ticket anymore because you've been diluted out of the system. And this actually allows for a fixed supply system where the governance eventually takes over as the primary reason of staking tickets, and the proof of work miners then continue to get the transaction fees. So you can actually have almost the best of both worlds. There's obviously trade-offs in all of this, but you solve to a large extent the coin distribution because you've got proof of work. And dilution of stakeholders, and you also get the security guarantees of proof of work with an additional layering of proof of stake over the top, which actually provides an exponential boost to the security system and finality.
So what's the ticket concept? Can you just clear that up?
Sure. So with many staking coins, you normally will, whether it's you delegate or you bind your coins or you just put them dormant into a wallet, whatever your mechanism is. In most proof of stake systems as they are today, you could easily take those coins. If you don't want to stake anymore, stop staking, send it to an exchange and sell it, right? You've got a very quick exit.
Yeah.
the way that Decred does staking is there's things called tickets. And the idea is that it's almost like the difficulty adjustment for Bitcoin has a particular level that the puzzle needs to be solved at, and miners must compete at that level. The algorithm for Decred automatically sets the price of the ticket price, how many Decred coins you need to buy a ticket. It's almost like proof of stake difficulty. The more people want to buy in, the higher the price goes, and it will always target a pool of 40,960 tickets. Now, what these tickets are, they are themselves a scarce resource. When you buy a ticket, somewhere between 2 days and 142 days, you have no idea what time period within that, that ticket will vote and be called to actually verify a block. So if you buy a ticket, you are locking your savings to the chain for somewhere between 2 and 142 days, and you have no idea where it's going to be. And that gives you the right to vote, a single vote, in whatever consensus changes or how the treasury is spent, things like that. I think the best analogy for a ticket is it's a digital ASIC. You are locking up, you are binding your savings to the chain for an indeterminate amount of time for the right to earn the reward, and also it gamifies governance. So you can make those decisions, but you are surely going to feel the effects of that because your money is bound up in an illiquid form. So that's how it kind of differentiates itself from other proof of stake systems.
So when you say tickets are no longer available, are you just referring to like this round, and how much would it cost me to buy that amount of Decred for the next round?
So every single block, there's 20 tickets that can be bought. And basically, if there's 40,960 tickets is kind of the target difficulty. Now, if not many people are buying buying tickets, the algorithm would automatically adjust the difficulty or the ticket price down until it finds those buyers, right? And if less people want tickets, it will lower the price into supply and demand. And conversely, if lots of people are trying to buy in for tickets, the ticket price will continue to go up. Now, probably an interesting little nugget is actually going through and looking at the total supply that's locked in the stake pool. Very interestingly, it actually follows the 60% issuance in proof of work. Now, to me, what that's actually telling me is that a large proportion of the coins that are mined and then sold to cover expenses are actually being accumulated by people in the community, and then they are making their way into the staking pool. So it's very interesting that the stake pool actually follows the supply curve of proof of work almost to the T, and it has done since history. So you can almost get a bit of an image of what's going on in the market dynamics as coins move from proof of work through exchanges into stakeholders' hands and then get withdrawn out and into the ticket system. So there's some interesting dynamics that get played through there as well.
Yeah, we're starting to see some similar on-chain metrics in Ethereum, where we've seen a lot of miners start to hoard ETH as they're making this transition. I think it's a similar thing where they want to hoard the ETH because all of a sudden it is a yield-bearing asset in future where they don't know if they might be able to get between, we're talking a few percent up to 18% on the ETH staking rewards. So a similar thing, I think, where the Decred community, they want to hold that Decred because it's going to give them more of a stake and a yield. It's not just like dumping a coin, which is the problem that these smaller coins have, I think, and probably something to dive into now. Even proof of stake coins. So we do a monthly mining update. A lot of these coins, you can mine them and whatnot, but they still need an underlying value, some sort of utility or monetary premium or something, because otherwise everyone's just mining them so they can sell them. And it's the same with staking rewards. There's plenty of coins that got people excited offering 80% rewards, and people hear 80% and they think, wow, and then the coin goes down 99%, and it was all just a waste of time and effort. So I think Decred does have an interesting model, but what gives it that utility? Is it the monetary premium that you think, because the maximalists say that only Bitcoin has monetary premium, or is it this governance model and the treasury where they're going to fund certain things, or sort of what is Decred's future roadmap that's going to give it that value?
Sure. So I think the best, Decred in my eyes, and again, it's like the elephant, right? You've got a whole lot of blind people feeling the elephant. Oh, it's this, it's that. That meme has relevance because it's different for everybody. The way that I look at Decred is it is a store of value first and foremost, right? It maintained all the sound money properties, the 21 million, the fixed supply, the deterministic issuance schedule, and everything is transparent up front. So it maintains the core sound money properties of Bitcoin. Don't fix what's not broken, right? So what it actually differentiated on is, I would actually argue, the longevity. So, there's a saying in Decred, it's hyper secure, which is kind of the exponential curve I was talking about before, and that's the settlement assurance, both in terms of making sure that your transactions are finalized, but there's also no single party, and there's a number of papers that have been written looking at how Bitcoin blocks. It's largely custodied by the miners, right? The miners are entirely responsible for the governance decisions for which chain has the security. And we saw this with the scaling wars, where you actually get two sets of miners, they disagree, two chains. If you're not mining on a chain, and we saw this actually with Ethereum, nobody mined on they hard forked, and nobody was mining on the other chain just dies and disappears. So miners actually, at the end of the day, decide whether to split the chain or not. And Decred kind of condenses that and says, well, no, miners and stakeholders, you actually work in tandem, keep the chain as a single unit. So there's no shedding of value long term. So we're not going to have a Decred cash split off. And this is where it kind of comes to, it's a bit more civil in that regard, where you kind of accept that you win some, you lose some. So there's the element of maintaining a single chain. There's the fixed monetary policy and the equivalent to Bitcoin. But there's also, at the end of the day, it comes down to certainty. And I run the analysis that the scenario through my head. Let's roll Bitcoin forward 50 years. All right. We get to a point where there will be hard forks in Bitcoin's roadmap. That's going to happen eventually. There's any number of reasons why that will have to happen. The reason, if Bitcoin was global money by that point in time, how much uncertainty does that really bring into the world when you actually have two warring factions? And if we are talking global money, there's a good chance that nation states are probably on the end of those mining farms. And we can't agree at the best of times at a nation state level. What does that actually look like? Is that really a sense of stability? Now, with Decred, we have that formalized governance structure that it doesn't really matter what the decision ends up being. The fact is that the path to get there is very, very clear, and it's very, very transparent. And that in itself is actually a level of certainty that Bitcoin actually can't offer. And it's the reason that I specifically follow the both of them, because there's more than one way to solve a problem. And Decred basically took everything that Bitcoiners hold near and dear and bet against it. It did it the complete opposite direction. Where we have a funding model for, for Decred, there's the hyper secure, there's the adaptable. So because it has that governance mechanism and it can hard fork, the technical debt that Bitcoin does accumulate, because it can't hard fork, and hard forks just in general are a cleaner technological solution. Yes, they split proof of work chains, which is why they don't do it, but it's a better technical mechanism for upgrading. Because Decred has a mechanism to maintain a single chain and hard fork, call it a controlled hard fork, it can actually iterate and implement technology stacks that Bitcoin can't at an accelerated rate. So some examples of this is Decred is 4 years old, and it's already forked in Lightning Network, and is the only other chain aside from Litecoin with Lightning Network that is live. It's forked in other systems. It's developed a privacy mixing mechanism, which currently does about 120,000 DCR a day, whereas Bitcoin mixers are doing that every month, right, for BTC. So it allows it to actually iterate and adapt much faster. And again, when we talk about push this thing 50, 100, 1,000 years in the future, Decred is very well prepared to actually have a mechanism to evolve. Right, whereas Bitcoin will calcify, Decred doesn't have to calcify. Yes, the status quo can be the way that things go, and things get more contentious the larger it is, but at least the mechanism to make a decision is clear as day. And sorry, the last one is sustainable. So it's got a treasury system, 10% of the block reward, and basically if you have tickets, you have the right to actually allocate some of that capital for the development of the protocol. So there's no VC interest. VCs can go and buy a DCR, that's fine, but they don't fund the development. There's no ulterior motives in the development stack, because again, stakeholders have the final say on how that money is spent, how it's actually applied to bring more value. So it's kind of got those three elements: the security, the adaptable, and the self-sustaining feature.
Yeah, I think governance is one that's still being experimented with by different chains, and we have seen a lot of problems with the proof of stake chains like EOS and Tron and whatnot with that governance. Treasury is an interesting one again. I think we've got the Ethereum Foundation, for example, and grants, and now we're experimenting with how to fund different projects. I do think it's hard for Bitcoin to ever fork again. Privacy is probably going to be a big argument in the future. but I just think it's sort of got to this critical mass now, and it's gone down this path of trying kind of calcifying, as you said, in a good way, that it wants to be that digital gold, but it's taking a longer period of time to make any upgrades. And that's where I think Decred would more be competing with an Ethereum, and DeFi move fast and break things and whatnot as well. But that still also risks hard forks, as we already saw in the past. Any thoughts just quickly on that?
Yeah, I mean, I think governance it's a word that a lot of Bitcoiners don't like to talk about, and that's because they don't understand Bitcoin's governance model. And Bitcoin's governance model, when you have rough consensus, you can upgrade your Raspberry Pi and you can have a say, but it's a very, very soft, muted signal. If you haven't got miners running the code that's on your node, you can't do much with it, right? You really you become a minority SHA-256 chain. So that's kind of the nature of this thing, is that you actually, the miners have a substantial portion, and they describe Bitcoin's governance model as a Mexican standoff, and it kind of is. But you end up, if we push this thing forward again and again, and if Bitcoin becomes global money and a global reserve asset, those miners will likely be outcompeted by nation state actors, because the incentives for a nation state are very, very different to the incentives for a private corporation who's making money. Because the prize could actually be censoring your enemies. The prize could actually be censoring transactions from people that you don't like. Those incentives are not profit motivated necessarily. And when I roll the whole, in my mental model, when I roll it forward, you kind of have to look at all of these scenarios, because mining, proof of work in general, it will centralize. It just does. It's the nature of the beast that you get efficiencies in hardware. Every time you get a reducing block reward with the halving, more and more miners drop off the map, and it makes it harder and harder for small miners to actually pick up the mantle and step into the field. So over time, we're actually going to see a reduction in the number of miners. So that actually concentrates the hash power, and that miner centralization, it's a real thing. All centralization is a security hole. There's a lot of talk in Bitcoin about trying to get more miners in the US and the Western world and move some of those mining facilities out of China and kind of distribute a little bit. But the nature is, at the end of the day, power, energy, centralizes. And that's why we have nation states who operate many of the power facilities around the world, because it is a large scale, economies of scale type industry. And it's very likely that Bitcoin mining will become tethered to power generation. That actually makes it quite easy to capture, and therefore no security on your chain. Good luck with your Raspberry Pi. So Decred is really a hedge against that as one of the many tail risks.
Yeah, I think that's a possible risk further on. I think at the moment we are seeing Bitcoin become more decentralized in terms of the mining, only because China had such a monopoly in
it's a relative scale.
Chip manufacturing and the hydropower. Lately, we've seen, I do think that it's going to become part of geopolitics, like crypto mining. We've seen Iran talk about these mining farms, as well as their currency being devalued at the moment. Australia has a lot of solar power. We've seen a lot of big farms talk about starting up in the US, and then Russia's going to want to get in on that as well. So I do think, even with game theory, if it was just a China versus the US thing, there's still, as long as there's sort of 50% and there's that game theory aspect to it, it's very hard for anyone to actually get the majority share and start to 51% attack each other and that sort of thing still, though.
It makes sense, but at the same time, will the world put all of their eggs in that single basket? If that is the case, at the moment we have largely a monopoly on the reserve currency, and we kind of see where things are heading with that, down that path. So it's not a foregone conclusion. No one has the crystal ball, but it's certainly a risk in a game theoretic perspective where the incentives work until they don't. And there could be a point where those incentives actually potentially switch to the point where, we do have actors that we don't particularly want on the end of mining farms. And because of the way that proof of work is, you can't kick anyone off, right? No miner has precedence over another. It comes down to how many hashes do you have per second. So anyway, it's one of those tail risks that we'll see how it plays out with time.
Absolutely. Other things to discuss. We've got so much data these days. We were joking about it before, how I used to look at things like Google searches and Facebook groups and activity and whatnot. These days we've got Glassnode, Sentiment, the TIE. I've got the premium subscription to all of those, and we've just got all this knowledge and data at our fingertips. I know you've done a lot of research, your own stuff, looking at some of theirs as well. What interesting things are you seeing at the moment, whether it's on Bitcoin or Decred as well?
Yeah, interesting. So I've been following on-chain analysis quite a while. We've got a community over at Rvt Crypto where I've kind of built a number of masterclasses that just take people through some of the basics. What it actually is, what on-chain analysis is, and it's kind of like where you get companies release their quarterly statements, while Bitcoin and Decred release their quarterly statements every 10 minutes and every 5 minutes, respectively. So block by block, we can actually look at the health of the network, and at the end of the day, there's a human being in most instances behind every transaction, right? We're going to see bots and things, but in general, there's a motivation and a human being who's sending those transactions and sending the value to be settled. And what on-chain analysis tries to do is kind of take the psychology of, what's the mood? What is actually going on behind the scenes of each of these chains? And, we can see things like, the NVT is a fairly intuitive one for people to grasp, or the Rvt ratio, which is basically taking your market value, market cap, or your realized cap, and dividing it by your daily transaction volume. And what we're looking at here is kind of like a PE ratio, right? How valued is the network? If you've got no one using it, it's worth $1 billion. That's probably not a great sign. And conversely, if it's worth $100 million and you've got $100 million worth of value flowing through it per day, it's probably undervalued.
Yeah.
So that's probably one of the most intuitive kind of on-chain metrics to understand. But it comes down to understanding the psychology of people and what is the herd doing, what is it moving. And what's quite interesting is that back in 2019, before we had the rally up to 14,000, there was a lot of signals that it didn't quite support the rally. There was a lot of on-chain. It was a very rapid rise. We weren't getting the on-chain transaction volume we were expecting. Some of that's got to do with Tether migrating across, and we've really seen that. You can't get anything into Ethereum now for a cheap gas price. That's kind of a lag on from that. But the on-chain data was really saying that maybe we actually broke out of that range a little bit too soon. There wasn't actually the momentum there behind it. And, since mid-year, we've basically been pulling back ever since. And since we had the major sell-off in, March 12th, we've really seen a lot of those signals reverse. We're now seeing a lot more transaction demand. We're seeing more addresses coming online. A lot of the undervalued signals just screaming green. So there's a lot of things. The May 12th, we were talking about this before, feels like the capitulation that we didn't quite get back in December. There wasn't really the volume back in December 2018 that signaled this is maximum pain. The amount of exiting that we saw from 30 to, I think Coin Metrics looked at it, 30 to 90-day-old coins. None of the old coins moved, but all the newcomers got flushed out during that March sell-off. That's what you want to see. That's what a bottom actually looks like, and you can see that on chain. So both Decred and Bitcoin really just flashed green across the board in on-chain metrics, and that's really where I was looking at our community to say start paying attention, because this is a lot more promising.
Yeah, back in that original December 2018 bottom, it was that Adam and Eve, that rounded bottom that we spoke about at the time, and it's a bit of an unusual because it doesn't have that capitulation and that height in emotion and everyone finally throwing in the towel. And similarly, as you said, with that run up, I think a lot of it was people thinking we're going to short 6K because it's not going to get back through 6K.
Oh, that short squeeze was impressive.
And then over a weekend, it went to 10. Next thing you know, 14. That was just crazy. And it definitely was. And if you look at the fractals of the previous cycles, it made sense to go through another bear market like 2014 and 15. It was a 2-year just sort of grinding out bottom, and if you actually overlay that, we'd be at that point now where it'd be starting to do what it is doing. So that makes a lot more sense than that big artificial pump that we had, I guess, in the middle of nowhere compared to previous cycles.
Agree, and it's quite interesting that you bring up the 2015 bottom, because the rally up to back in 2015, they had that rally where it came up and it kissed the realized cap and then sold back down. And it's almost like that 14K rally was just a really exaggerated version. And to be honest, driven a lot by the, market matures with derivatives and options and futures and things. You get these, higher volatility until we reach a point where we get less volatility. So, there's a lot of market structure elements that played into that. And, some of the work that people have done looking at, what was the actual demand on chain during that transaction flow. And there was a number of Ponzi schemes and things that were potentially driving that price. So it's amazing we can actually review what's going on chain to almost any level of granularity. And as you said, it comes down to fractals. What are the previous fractals telling us? And that 14K top, if you look at something like the Mayer multiple, which is just a simple ratio with a 200-day moving average, it kissed 2.4, which is pretty much the historic start paying attention and maybe exiting, kissed that level and rejected and sold off for another 12 months. So these history elements play a role.
I honestly think the price discovery is just such a little like chasm of the space, but we've got this 100 times leverage and all this volume and derivatives, and that's where we get the price from. Where over time, I think Bitcoin wants to go to this much higher market cap, but the journey to get there is going to make people a lot of money, lose people a lot of money, and we have to sort of get there slowly. And every time we have a burst, a breakout, we have to have a crash just because of the way that people are buying and selling. So when we have something like a little Ponzi scheme that's soaking up a lot of money and then dumping it, it can actually really move the price. Just like we saw with the capitulation the other day, where BitMEX had to go offline. I honestly think that the price could have gone to zero on BitMEX because of that cascading long squeeze. And it's just funny to think about that is where we are getting the price of Bitcoin from.
And the volume on BitMEX has never recovered, right? I saw snips of the order book during that time, and it was a ghost town. We're talking several $1,000s between bids and asks. Like the thing just got smashed and it's never recovered. And we'll see these different exchanges rise and fall. And I was talking about this the other day. Actually, at the end of the day, it all comes down to the spot market, because the spot market will move. There's incentive to have large short and long positions on derivatives and then move spot. But at the end of the day, the spot is what moves the price. And you've got these fairly illiquid order books, to be honest. I mean, there's 21 million coins. There's a vast majority of them that are not on exchanges. Spot will get thin at some point. And, I guess is where it kind of gets into the halving, that over time it's going to get thinner and thinner and thinner.
I mean, I remember in years past when markets were really taking off and Bitfinex had the majority of volume and they only offered it 3 times leverage, there were times when the order book ran out. There was no coins left to sell. And that's because it takes time to get the coins through the chain to an exchange. And when the chain got clogged, people couldn't even get them to sell. So that all sort of played out. It can happen again in future. But now I think, volumes have reshuffled away from BitMEX. We've got Binance Futures, FTX is an up-and-comer, a lot of other exchanges now. But I do think that we're still going to see these cycles where people have made a lot of money and they sell, and there's just this story in the background where Bitcoin just wants to get to this global currency market cap in the trillions, but it just can't get there. It has to take a slow path there.
It's got to go through the roadmap, doesn't it?
Which is very, very interesting to think about. Other things that you've been looking at, any other on-chain data that you find interesting or people at home might not know about?
Yeah, I mean, and I guess this is where my interest in Decred, again, kind of spikes back in. We get very different signals with Bitcoin and Decred, and there's a combination there. Bitcoin is obviously substantially larger in size, and there's a different use case. And I guess you can see this, what the use case is for these chains based on their, how they're actually being used. And an interesting metric is for Bitcoin, a high conviction holding signal, right? I'm bunkering down for the long run. Is you withdraw it on chain, and that's it. Right, it's a period of dormancy of coins, and things like the realized cap, which basically prices every coin at UTXO at the last time it moved, is a good metric of this. It's almost like the value that you saved at that particular time. Decred's kind of the opposite, because there's the proof of stake system, which means for my journey with Decred, I started by buying a few of the coins just because I liked the project. It sounded like a good hedge, and I held it for that speculative store of value. The more I kind of read up about it and understood, eventually I'll work my way up to affording a ticket so I can at least participate in the governance mechanism. The more time I spent in there, eventually I go, I'm really getting pretty committed to this, and I actually moved to the point where I started to become a contractor and started putting forward proposals to do the research and start understanding the chain more and providing that information for stakeholders, in particular on the on-chain data, because governance is so important for Decred. Having good information is as important. So something that really motivated me was trying to take some of the studies I was looking at from on-chain and documenting it and allowing stakeholders to have as much information as they can to make the best decisions based off it. That's kind of where that evolved. But it's kind of gone from speculative store of value to buying a ticket to becoming a contractor. And, the other party is miners. And a lot of these parties cross over these different fields. So, for Decred, having a high conviction hand, you don't just pull your coins off an exchange and then hold for the long term. Your coins are always moving. You're always buying tickets. You're participating in the system. So it has a very different signature to what Bitcoin does. It's a lot more participatory in that regard. So a lot of the metrics that get directly applied from Bitcoin across to Decred actually don't necessarily stand merit. There's a different psychology behind it. And an interesting metric that I follow is the 142-day, because that's the period of time when every single ticket will have either voted or expired. So it kind of captures the running average of every single, call it stakeholder commitment to the chain. And if you take that $142 sum, it almost forms an upper Bollinger Band. And price during the bull run reacted almost to the T and slings outside it and then gets hauled back inside. And then you take the Fibonacci levels of it, and the 23% acts in the complete opposite direction. Every time price comes down and touches that level, you get this slingshot maneuver. So I think at the end of the day, it's about finding when do you look for periods of mean reversion, and where are you getting very, very extreme levels of fluctuation beyond what is reasonable. And you've probably seen many Mayer multiples and various metrics of Bitcoin. When price just runs a bit too far either direction, it's a period of opportunity on both sides. And that's really what I think it's all about. It's about understanding the psychology and then understanding where is the mean and where are we looking for periods of mean reversion. There's opportunity there, and for most casual investors and things like that, it makes a lot of sense to use these high conviction signals that tell you tops and bottoms with very high accuracy. Sometimes that's all you need to see.
100%. Interesting that you say Ethereum also has those different characteristics where there's a lot of more, I guess, use case in smart contracts and DeFi, moving them about rather than just the hodling. I put so much weight in the on-chain metrics and sentiment. Since we started the channel, it was always a mix of some TA and FA, but then that psychology and sentiment. And these days we have all those metrics. We put them in our newsletter. I talk about them all day on Twitter and YouTube and whatnot. I think they're so important. Any final? One final question I did have was about your experience, because Decred is one of these interesting projects in the relationship it has with Bitcoin maximalists. There's some maximalists out there that have really warmed to Decred. There's some that are sort of friendly with Monero, and then some like Litecoin. Some that are, Andreas is writing a book about Ethereum now, as well as Bitcoin. They're the only two that he really focuses on. I'm open to everyone, and I like experimentation, and I think the community would get a lot further if we had less tribalism. But what do you think about all that, and what's it been like, dealing with some maximalists and that?
To be honest, it's one of my favorite pastimes is egging on the occasional maximalist, because what you tend to find is I understand where it came from because I was tending down that path myself. But, if you keep any kind of open mind, and I've been mulling this over a little bit recently, actually. If we expect Bitcoin to be, why does Bitcoin have the potential to disrupt gold, right? The gorilla in the room, 5,000 years of human history of being sound money. Paper money is kind of, originally it was built as a lightning network on top of gold, right? That's the probably best analogy. And what ended up happening is that it became so useful to use divisible paper money that we can get rid of silver. We can just use paper money. And then people found that because you've got the centralization of it and we can start lending out fraction of reserve, things like that, it gets spoiled. So we expect that Bitcoin can kind of rise up, and, Bitcoin was a shitcoin at one point as well. And we expect that Bitcoin can overthrow a 5,000 year history of gold. And gold is kind of the mean reversion for economic history. We always fall back to a sound money perspective. And I know you had Grant Williams on a little while back, and he's got such a good perspective on this. We always fall back in, and history is our best teacher. So the reason that Bitcoin is an actual genuine contestant for gold is because it's a substantial improvement. Paper money was an improvement on the portability and divisibility and all that kind of stuff of gold. Bitcoin is easy to verify. It's immutable. It's a bearer asset. So it is a 10x improvement, potentially more, on what gold is. And actually, it's a 10x improvement on the gold and paper combination because you have the distribution mechanism of the internet to make it happen. So I understand that, look, the liquidity and the reputation, everything is very, very important. It really is what drives Bitcoin. However, it doesn't have the liquidity of the US dollar. And we saw this during the recent shakeout in traditional markets. No one was buying Bitcoin. They were selling everything to get dollars. So it remains the most liquid, most demanded good. So the fact that Bitcoin has the possibility of disrupting something because of its technical merits, yes, it has the reputation, yes, it has the liquidity, but at the end of the day, is that actually Bitcoin's strongest selling point? Is it actually the liquidity because from a technical perspective, there's many different projects who could iterate and do different things, and you could argue are technologically superior to Bitcoin, but the reason that they don't have top spot is because it doesn't have the reputation and the liquidity that Bitcoin does. But Bitcoin doesn't have the reputation and liquidity of gold, and it doesn't have the reputation and liquidity of the US dollar. So the fact that you can have one overtake the other, it shows that nothing is certain, everything is disruptible. And it could very well come to a point that if Bitcoin calcifies at the wrong time or doesn't adapt in time for the privacy problem to be solved, I like to, lots of Bitcoiners like to point at chain analysis and say they're so evil. What's wrong with you? Why would you do that? Chain analysis is a free market response to demand to surveil your blockchain. And the reality is it's actually a flaw in Bitcoin's design that chain analysis can do what they do and cause such a ruckus. So, Bitcoin needs to evolve to counter these things. And there's going to be many challenges in the future. We don't know what they look like. So I understand the monetary maximalism side, but a Bitcoin maximalist also sounds a lot like Peter Schiff talking about gold. There's a strong focus on one thing and kind of a lack of looking elsewhere.
Yeah, I agree with that. I think Bitcoin will upgrade, particularly in the next 12 to 24 months, or it kind of has to. It's almost like its last chance. People forget how quickly that altcoin euphoria took off and Bitcoin dominance got down to under 50%.
30%, I think,
yeah, well under 50%. And the sheep and the herd are going to do whatever they feel is best at the time. So Bitcoin, maybe, who knows what that that dominance could drop down to. But the other things I wanted to mention were the importance of the spot market. I wrote up a piece about Bitcoin's liquidity the other day because that is the final piece of the puzzle. If Bitcoin did have as deep a liquidity as bonds and the US dollar the other day, I think it would have had such a premium because it's got 24/7 trading.
Agreed.
With everything that was happening over a weekend, 48-hour period can change history. And if you were able to move assets around and you have it in your custody when everyone's worried about banks collapsing. So they're the sort of things that are going to give Bitcoin a premium once it gets liquidity as well. And in terms of the spot markets, the final thing, the leverage that we spoke about, look at what's going on with oil at the moment, where we have all this leverage trading. It's the same with gold. When oil had to be physically delivered and there was too much, it went into the negative and people just saying get rid of it. Gold, I think, is possibly going to have the opposite effect, where there's these 100-to-1 claims, and when Samsung need their next batch of silver to make technical parts or solar panels, or when someone just needs gold, they're going to say, well, I want delivery, and that's when the price could cannon the other way. A similar thing I think is going to happen for Bitcoin and these derivatives, CME markets. We're just going to wake up on a weekend and Bitcoin's gone from 40 to 50,000, and there's going to be all these liquidations because it doesn't trade 24/7. So I think that whole importance of real markets, and we're seeing ETFs crack on Wall Street and this, that, and the other. So really important for the crypto markets to capture that, I think.
Agree. And the divergence between, as you said, between paper markets and, IOUs on something and the reality of having something. And at the end of the day, if we end up with some form of sound money at the end of all of this, doesn't really matter if it's gold, doesn't matter if it's Bitcoin, doesn't matter if it's Decred, doesn't matter what it is. If we end up with a system where we have that tangible, the discipline of a sound money backing, you're always going to have IOUs on these things. But at the end of the day, who is the person who is sitting there with the final say? And it's the person with the physical asset. And you're right that this is where those premiums, those monetary premiums comes from. It's a combination of the liquidity, but also the desire to hold them. And, it is where Bitcoin competes. It's where gold competes. And, I think one thing's for certain, money will be very different in 10, 15 years. I think we're in a very, very interesting time in history where we're seeing it change. And I think for the first time, I started questioning money back in 2018. What is money? And when you kind of realize just how much you don't know about it, you can't help but just keep reading. And I think the world is slowly coming to that realization. We're seeing currencies hyperinflate around the world. We're seeing gold at all-time highs versus everything except the US dollar. We're just seeing, stimulus, which it's not really stimulus, it's kind of topping up the gaps in the market. But we're just seeing all of these things show up that make people question, what is this piece of paper in my wallet? What are these numbers in my bank account? Do they actually mean what I think they mean? And I think it's a fascinating period of history to be around for.
Yeah, and you felt like a real weirdo questioning these things 10 years ago, and now it is just so interesting watching it play out, and people ask the same questions, and the curiosity, I think, is just fantastic. So I guess full disclosure, I do own some Decred. I added that one to my portfolio, as our members know, maybe a year ago. Time flies at the moment, so it is one that I think does have an interesting future. I'll put the links to follow Checkmatey down in the description below. It's been a fantastic chat. I hope you guys have enjoyed it, but any final thoughts?
No, thanks for having me on here, Alex. I think one thing I'm really bullish on about this space is the open source nature and the sharing of information. And I think things like this, it's how I learned, listening to people talk about it and come to their own conclusions and kind of come along for the journey. It's the reason that everything I do is free, open, and public. I think it's really important to be doing these things. So, keep it up, and we have to do this again at some point.
Definitely. We'll have to meet up at a meetup once we're all out of ISO. So thanks for joining us
now
today,
I'm back
mate.
in the Australian time zone. It should work out much easier.
Fantastic. Hope you guys have enjoyed that. We'll speak again soon. Cheers.
Thanks.